Joining us now in a first on CNBC interview, Taylor Morrison CEO Sheryl Palmer. Sheryl, thanks for being with us today.
Thanks for having me. Good to see you.
We know housing has been on fire, and when I see a growth number like 46%, can that pace continue in 2021 as vaccines roll out, as people start to rethink their living situations, the economy fires back up? How far are we into this cycle?
I think it's a new cycle. I think when you talk about what we have ahead of us, you almost have to take a couple steps back and look at where we were pre-COVID days. I mean, if I think about first quarter of 2020, it actually started very strong. 19 had somewhat moderated. We come into the year 2020 pretty strong. And then obviously at the end of March, we all know what happened. And we took a pause for, a good 60 days. And then for a number of different reasons, we've seen that demand very strong. So when I look at the numbers we reported yesterday for 2020, that's with consideration of really a slowdown during the second quarter. We also guided yesterday to closings in 2021 up somewhere between 18 and 20%. And you already talked about our backlog numbers coming into the year. So it's a very good sales environment today.
Yeah, I'm curious where you're seeing the most demand, the most strength. I mean, I was speaking to the CEO of Martin Marietta yesterday, and he was talking about basically these hubs in terms of migration and what they're seeing, how that's affecting their business. This morning, we had the CEO of Zillow on, who talks about the great reshuffling. What are the geographies? What are the locations where you're seeing that robustness right now, and how does it speak to where people are leaving, where people are moving?
It's a phenomenal dynamic we're seeing out in the marketplace. What I shared yesterday is we're seeing strength across pretty much all geographies as well as all consumer groups. And that's a shift from a few months ago. I mean, when we first came out or when we first came into the COVID environment and sales started picking up, we really saw traction with that young millennial buyer. They were wanting to get out of apartments, maybe out of mom and dad's basement. And then that has really moved across all consumer sets. The 55 plus lifestyle buyer was the last one that we saw come back, because they weren't really traveling for all the right reasons. But given all of our virtual tools, we are seeing them in such a big way. And I would tell you, we've entered almost a new normal when I look across our consumer sets and our product lines.
So, Sheryl, that's all the good news, of which clearly there was quite a lot. What about some of the pressures? Are you concerned about rates rising, and are you concerned about raw material costs?
Yeah, so let's take those both separately, because two very different topics. When I look at rates, I mean, I think we have all indications that rates are going to stay low for the next 12 to 24 months. And we are in historically low territory, even though we might have seen 3 or 4 bit movement over the last week or two. When you look at the buying power of the consumer today, given rates, they have about 20% more buying power. So I look at that $300,000 house a year ago and what that was costing them on a monthly basis. They can either buy a lot more house, or obviously what we're seeing them do is both buy larger, as well as we're seeing them appoint the house with a lot more amenities. On the production side, you're absolutely right. We are seeing tremendous pressures. And I think you have to put it in perspective. You go back 6 months, second quarter last year, we were tracking to build about, on an annualized basis, about 1 million homes a year. We moved to the end of the year, and that's about 50% higher, where we're tracking at 1.4 to 1.5. So that's putting tremendous pressure on the supply chain, just in the numbers, before you consider any of the impacts of COVID and plant shutdowns. So it's driving commodity prices up. It's really putting a stress on the labor market. In different markets, we're seeing that stress point at a different point in the construction cycle, maybe elongating the construction cycle in some parts of the country. But there's always something that we're dealing with. And right now we are dealing with higher costs. And there is room. I mean, as you've heard, and you heard from Zillow this morning, we're seeing prices move. The other phenomenon we're seeing, which I think is probably most interesting, is we're seeing the differential between new homes and the resale market get very, very close. And when that happens, it creates a real bias for new, because if I'm going to spend the same amount of money, I might as well have a new home. And I think when I consider that, and then we added our LiveWell, TM LiveWell program, last year to help really make sure that everyone knew that our homes were safe with air filtration and water, that's only just helped us even more.
Wow. Well, Cheryl, thank you for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.